Welcome to the Savvy Property Investors Podcast, a weekly show that delivers the best hard-hitting property industry news, business advice, and talks that will get you ascending in the real estate industry. Now, here's your host, the amazing award-winning property and business coach, best-selling author, and serial entrepreneur, Miss Sapphire Gray.
Welcome to another Property Investors Podcast. Our guest is none other than the property financial expert, who I love to call the financial guru, Miss Angel Thomas of In2Equity. She'll be sharing with us the various financial avenues that are available and open to both beginners and veteran property investors. I'm Sapphire Gray, and let us start. Angel, thank you for joining us today.
You're welcome. Thank you for inviting me.
Excellent. So I'm going to start off with the first question. What is property financing? How do you finance property?
Well, there's several methods on financing properties. Normally, the traditional way would be to go to your high street bank or go to your bank or building society. You could also go to a broker. Now, if you go to your bank, the bank's only going to show you their products that they can offer you. So they may have between 3 or 4 different products that they may offer you, and different, could be different loan to values. Now, if you go to a mortgage broker like myself, I can guide you through the different products and see which actually suits your circumstances best. So therefore, you may only have a smaller deposit. Like, for instance, if it's a residential purchase, you may want to put down 5%. So some lenders are doing the 5% deposits, some aren't. Or if you're doing a buy-to-let, for instance, you may only have 20%, where most lenders require 25%. So I would find your lender which actually take a 20% deposit. So there's lots of different ways. I mean, there's also, you could get gifted equity from like a parent's home or gifted deposit money. So there's so many different ways that you can actually finance properties nowadays.
What is it the steps that you need to get a good financial support from lenders?
Right. Well, I always say to my clients, before I even see them, I want to see a copy of their credit report, because depending on what they got on their report, then I know what type of lending I can actually get for them. Because some clients, I may see the report and might think, okay, I can't work with you for another 6 months, or we're going to have to wait another 9 months. So it's essential that you check your credit report, see what's on there, see if you've got late payments on there, if you've got any adverse credit on there. Try and get things up to date as you can. I mean, if you had a CCJ registered maybe 2 years ago, some lenders won't, it'll be okay for some lenders. Some lenders, it's still a no-go. Some lenders will want to see it satisfied, and it may also require you need to wait three years before they'd even consider you. So I always say, start off looking at your credit report. Me as a broker, I always want to see the person's credit report so I know the type of lending that's available for them. Another thing would be to always look at the money that you can actually raise. How much money do you think you can raise to do the purchase? Because without knowing how much money you can raise, you don't know what type of financing you're going to need, and you don't know what kind of areas you can look at. Because it's pointless you saying I've only got 20,000 and I want to do a buy-to-let in London. It's really not going to work, because, as you know, London prices, even for a one-bedroom or a studio flat, you're looking at 180,000 in most places, and most lenders are going to want to require a 25% deposit. So you can imagine that it's quite a bit of money you need. So you've got to understand your strategy before you can decide. Well, first of all, look at the credit report, then work out the type of the deposit you have, and then from there, then you can work out your strategy, or depending if it's your trainer you're working with or your broker can work out your strategy with you to see what you can actually afford and where to buy.
Brilliant. And do you always advise working out a strategy, a property finance strategy, when you're looking to be like a first-time investor? Or even a seasoned investor? Do you always work out the numbers first when you're looking at a deal?
100%. It's pointless looking at anything without working out the numbers, because what works for you may not work for the lender, and you need to know what's going to be your return, or what you're expecting to get out of this, what sort of rental you're expecting to achieve. So it's always good to know your area, know your strategy, know what numbers work, because when it comes to lenders, most lenders will do a rental coverage. They want to stress your rent on maybe 125% of the loan amount. So therefore, well, that's if you're a limited company mainly, or sometimes it's 145%. So for instance, imagine if you bought a property and the rent you was going to receive was say the mortgage was going to be £1,000. Now, the lender would want to see at least £1,250 coverage on that, if not 1,450 coverage, depending on the stress level they're using. And they use, so always check with, as I say, either the bank or the broker to work out what you can actually achieve on this property, or what the numbers are going to look like for you.
Oh, excellent. As you know, we've got a lot of people going out there at the moment and buying a wealth of properties via auctions or the traditional treaty properties. What would you say in reference to when you're looking at buying properties? What's like the interest rates for buying in a company? How many lenders are lending to company now that's on the market?
Right now, a lot of lenders are actually lending to limited companies or SPVs, because they know that this is the market for it. Because with the new tax situation where a lot of people have decided not to buy in personal names, now they're looking at limited company lending. Now, the rates used to be a lot higher. I think the rates are coming down a little bit, to be quite honest, on limited companies. But then the way they do the rental calculations is a lot different as well. It's different to the normal buy-to-let calculations. So it's always good to see what your options are, and depending on your strategy as well, because if you're only thinking about buying one property or two properties and you're not bothered about sort of building a portfolio, then your route may be just to buy it in your personal name. I guess once again, you're going to need to speak to your accountant or tax advisor, because one rule does not fit all, because, as I say, what works for me as a portfolio landlord is not going to work for somebody else who's going to just own one property and not want to earn more than, two properties. So, yeah.
You use the word SPV. What does that actually stand for?
SPV, special purpose vehicle. So it's like it's a vehicle set up where you can buy properties. So it has these, they call them SIC codes on there. So I couldn't tell you what the codes are by hand, but if you Google it or ask your accountant, they can tell you what codes need to actually sit behind it. So basically, it's solely used for buying and selling property. You cannot do no other transactions in that company. It's only for property business.
Excellent. Thank you very much. When you're, what's the most important thing that you feel that when you're seeking the right property financier, what do you look out for? What should be the top thing you look out for?
When you're thinking about the lending you're going to get?
No, when you're looking out for like a broker or someone like that, what is the things that you should look out for?
Right, if you're looking out for like a broker, or even if you're going to go to your, high street. For instance, if you're going to a high street, always try and understand what products they have for you. So see if it's worth going to your bank. If you're going to a broker, it's always good to go to a broker that's whole of market, because going to somebody like me, which is whole of market, is like going to the whole of England, every bank and building society, because I have access to all the different banks and building societies to see because I won't just look at the high street banks. I'm going to look at building societies you may have never heard of, because the high street banks aren't always so friendly, and they like to cherry pick their clients, because they're only going to deal with the crop of the crop, because they want to make sure that the risk is lower. So and especially when lending is tight, that's when they're going to put more emphasis on, we only want the best of the best. We want people who've got good credit, want people who've got good income, good track record of where you've lived. And if you've got your accounts, we want more than maybe a year, 2 years of accounts. So, but then there's other building societies or little smaller banks which will still lend to people, even if your high street bank says no. But going to the high street, you're not going to know that. Using a broker, they've got all the tools to see what can be achievable, what you can actually do.
Excellent. Thanks. When you're looking at criteria for clients, you said before about interest rates and whether they stack up in the credit reports and searches like that. So you have an advantage as a whole of market advisor to actually look across the markets, don't you?
Yes, definitely. So I'd look at, because sometimes it's, for me, obviously as a property investor myself, it's not always about the rate. It's a case of what fits with the lender, what's going to go through with the lender, and what makes, because at the end of the day, somebody offering, a couple of percentage, 0.5 or 0.25 less than another lender doesn't mean I'm going to use them. It's a case of, is it going to work for me? How much is the arrangement fee? Because some arrangement fees could be 1%, could be 1.5%, it may be 1.99. And don't forget, that's going to be added onto your loan. And therefore, and also you've got to look at early repayment charges, which we call ERCs. How long is the early repayment charge for? Because I might decide to buy a property, but I only want to really keep it for 2 years, but I'm tied into a 5-year deal. So therefore I need to know, okay, well, is it really worth me taking that 5-year? But then the rates are going to be more favourable for the lender if you take the 5-year deal. So there's lots of things to weigh up to decide, okay, is this the best option for me, or should I choose something else? And that's not an easy decision, because without having the knowledge and the tools behind it, it's like a needle in a haystack, thinking, okay, which way do I go? Is that the best option for me? Where as a broker, we should actually decide, okay, based on your circumstances, or if you've got any credit issues, or if your income's a little bit short, this is the way to go forward.
Like what you hear so far? Make sure you never miss a show by clicking the subscribe button below. Our podcast is only made possible by great listeners like you. To know more about how to be a part of this podcast as a guest or sponsor, head over to our website, www.savvywomen.co.uk, and register to partner with us. We thank you for your continued support. Now back to our host, Miss Sapphire Gray.
What do you feel that the current trends in the property spaces at the moment? What have you discovered from your clients?
Right now, a lot of people are looking at SAs, which is service accommodation. Basically, service accommodation is where people will take a property, they convert it into a service accommodation, which is like a small hotel, and they would rent it out per night, like a room. So it's almost like a hotel. But the benefit of using a service accommodation is that you're paying for the apartment rather than paying for a room. So you've got cooking facilities, and you may be able to have, more than 2 people in there, where a room you've only got 2 people, which may be £90 for the night, where you might have to pay £120 for a whole apartment, or it could be even less depending on the area, where you may have up to 4 people in there. So it will really make sense to have a service accommodation. And with service accommodation, you'll find a lot of corporate people, contractors use them in certain areas, because especially for the contractors, it's all about heads on beds. It's like, if I can get an apartment and I've got 6 beds in there, and obviously 6 contractors, is better than trying to say, okay, let me do £60 a night each, where we can just do maybe £120. So therefore, it really works for those type of people. And holiday lets is great right now. It's like the market's booming. As you can probably hear on the news, people are not going to travel so much this year, and probably even next year. So it's all about staycation. So people are really looking into the holiday lets. And also HMO. HMO has always been around and still is around. Now, obviously, there was a downturn in the market during COVID in certain areas, but certain areas were still thriving. But once again, it's all about the numbers, because you imagine if you take a house and you can rent out 6 rooms, and you can make maybe income of maybe at least £800 per month based on renting out the rooms and also paying all your utilities. That's a good. It's a good model right now. Excellent. I mean, single buy-to-lets is still good, because some people just want to have the investment there, hold it, let it sit there, and let it appreciate in value. And also you've got your BR, is it BR? Yeah. Right, so that's always been around, where buy, renovate and flip. Once again, they're all very good strategies, but I think right now, it's all about maximizing your rent.
Yeah. And I think sometimes when people go for the single lets, it's around just wanting hands off, basically. When you rent in a single unit, you've not got really much involvement in it. You're making sure you've got the right tenant and they're paying their bills and everything, but you're hands off. With a HMO, you're more hands on with your tenants. So I understand why single lets are still sort of a primary source of income for some people. How about commercial? What's the commercial world looking like at the moment in regards to finances?
Right now, commercial's very hot. As you know, there's going to be a lot of repurposing. So people are looking high and low for commercial units. Once again, the figures need to stack, because I get approached with deals all the time. I look at the numbers and thinking this is not going to work. So, and I think a lot of the commercial vendors have realized this is happening. So once again, they want to try and maximize. They want to actually make their money before they've actually, the person's actually done the deal. So you've got to be very careful when it comes to commercial. But commercial is really good right now, because obviously you can convert a whole, a shop into residential, or obviously convert upstairs into flats, and you could even get the flat at the back sometimes. So it's also a very good avenue to look at.
What kind of rates would you find, interest rates?
Interest rates for commercial, you're looking at maybe 0.8 or 0.9 a month, 0.8 or 0.9 a month. As you know, commercial is more of the longer term finance. So therefore, lenders also want to make sure that you've got some sort of experience, because 9 times out of 10, they're not going to take a newbie, because they want to see some sort of track record. They want to at least see you've got a buy-to-let maybe in the background, or had some sort of property experience. Not to say it's definitely a no. If the deal works, lenders will jump and lend to you. But it's always good to, at least if you're going to start off, I would start off as getting a buy-to-let, or getting a HMO, or getting something where you've got to understand how this works, and working with builders, because working with builders, as we all know, is not always easy and can be a nightmare. So you need to, choose your builders well.
All right. So what are the 3 things you would like first time buyers, or property commercial buyers, or anyone that is getting into in regards to the finance, what's the top 3 things that they need to have in order to move their applications forward?
Right, they really need to check their credit file. I always tell clients, I used to say it was Equifax, but now for me, it's my file. It has the 3 different credit reports on there, so you can have a look at what Equifax is saying, what Experian is saying, what TransUnion is saying, what they're actually reporting about you. Because sometimes, especially Experian, it may not have everything on there, and I found that in cases where clients thought their case with their credit file was fine, and then you do the application and the case gets rejected, and you think, why did it get rejected? Then I say, okay, let's have a look at something else. Let's look at another credit file. And then I realized that there might be a CCJ that was registered 2 years ago, but I didn't know about, because obviously I've only seen the one file. So I say to people, it's a good idea to check your credit file on a regular basis, even if it's only 2 to 3 times a year. You need to check just to see what's going on. Always make sure that you're on the credit the voters roll as well, because that also gives you brownie points with the lenders. Another thing, obviously, look at your deposit. Where's your deposit coming from? Can you show evidence of the source of the deposit? Even if you're getting gifted deposit, they're going to want to see the other person's bank statements, because they need to see track history where the money came from. So see where your deposit's coming from. And the next thing would be, make sure you do your due diligence. It's pointless you bringing me a property to say, I want to buy this property. You've not checked out the rents in the area to see what is achievable, because it's pointless putting an application, because one, you're going to waste my time and you're going to waste your own time, right? And also the lender's going to be happy because you're going to pay the valuation fee and everything else. But it's like, check the rents, see what rents are available in the area. Be realistic with your pricing to say, okay, if the agent tells you, you can get £1,000, check some other agents. Don't just go on the per se of one agent to say that agent said £1,000. No, check 3 or 4 agents in the area. Look on Rightmove's, Zoopla, find a property. Check to see what's happening in the area, and also look at the values in the area as well, because just because the agent says it's worth this amount doesn't mean it's actually worth that amount of money. Check to see what's sold in that area as well, because obviously, once again, the lender's not going to give lending if you're buying a property for 100,000 where they can see that just 2 months ago, something sold for 60,000 on that same road, and you've got several sales selling for 60,000. So yeah, just dig deeper, and see what you understand. This is a business you're in, so it's not, you can't afford to mess around, to be quite honest.
True. So basically, get your credit report, make sure your finances is in place, make sure you do your due diligence and investigate through free estate agents or for the letting side of it. Make sure that you can reach the value that you want on the property as well, which is always good advice. So thanks for sharing that. Can you share with our audience one tip that you would always recommend?
One tip, where do I start? I would say, for me, I'm always a numbers girl. I like to look at the numbers to make sure the numbers work, because it's pointless. I've been time after time, you look at deals and you feel like the numbers really work. And then sometimes you've got to revisit it and really sort of home in deep on those numbers to see if it's actually going to work for you. Because it's okay if you're prepared to hold a property for like 5 years, 10 years, it's going to appreciate value. At the end of the day, we're always going to have an upturn and a downturn. It happens every 7 to 10 years. Who knows, we could be having one soon, but right now the market's hot. It's a good time to buy. And I just believe in, just check on the numbers, check on your area, and just have confidence. And also, you may consider having a good coach, because obviously having a coach sometimes actually helps your journey even further.
Excellent. Thanks for that advice. Thank you so much for answering our questions today on our podcast. How will people get in touch with you? Would you like to share how would our viewers get in touch with you if they would like to use your services?
Right. If you just contact me on info@in2equity.co.uk, that's IN, the digit 2, equity, EQUITY.co.uk. Also, you can get me on Instagram or Facebook at in2equity.co. In fact, just In2Equity. You should be able to find me. My contact number is 0800 772 0998. Once again, 0800 772 0998.
Brilliant. Thanks for sharing that. And thank you so much for being a wonderful guest. So come on, savvy investors, let's take flight. Don't forget to subscribe and rate our podcast, review, download, and share. Thank you for listening to the Savvy Property Investors Podcast. See you on the next episode.
This week's episode of the Savvy Property Investors Podcast was brought to you by our sponsor, the Savvy Women Group. Thank you for tuning in. If you enjoyed today's show, head over to our website, www.savvywomen.co.uk, to gain access to our free resources and more insights about our guest speaker today. Remember, we make your business our business, so you can unlock your full potential and improve your quality of life.